What's up, guys? We're gonna break down today's trade. Let's move pretty quickly here, just so we can get to the point. So today there was an overall bullish bias. Um, why? Because that's what price is doing overall. It's bullish. We're in a weekly area of demand on the. I'm looking at the daily usually to start. New York session, New York session before New York Open, and I know that there's missing price there. I know there's missing price there, so I know that most likely the high probability is that price is going to continue. Now, what reaffirmed this bias was this wick on the 4-hour time frame. So we understood that we came into a 4-hour area of supply, and we were ejected from it, but this wick, what you have to understand is that it took out all the liquidity to the left, right, before it comes back up. So that explains this one right here, and it's rewinded right now. Let me see, price is rewinded, so I'm gonna be looking at the, let's say, 5 o'clock. All right, so before this candle, so let's say we're in the 30-minute time frame. I understand that my bias is bullish. I understand. I even marked. Let me see. Let me change this color here so you can. All right. So I understand that this is the previous high when I look to the left, right? So if we have a continuation trade, we're going to pierce through this order block because that's what we do. We either reject from the order block, we come into it, grab some liquidity, then reject, or we pierce through it, then reject, or we just straight up break through that order block, right? And what you have to understand is that we're coming from an area of daily, right? We're coming from a daily area, so it's a lot of bullish momentum, right? And then we're going into an area of a weekly supply. So, disregarding this 4-hour order block here, I at least expect price to come and tap this area at least, right? Before it reverses or, get some consolidation and keep going up, whatever you got to do. So I also understand that price is very efficient. There's no gaps or anything like that. On top of that, we're looking at the 30-minute right here before 4:30. This candle here took out previous liquidity, mitigated whatever price you need to mitigate it, and to give us a 30-minute order block, which was also mitigated, right? So we're looking at price, and it's very efficient. Price is very efficient going up. So now I'm looking at the 15-minute time frame, getting ready to set up that trade. I know that my London high, my Asian high are about to be again mitigated. We're about to pierce through it, right? And I'm looking at all this price, and we have bullish order blocks that are retesting. We have a liquidity line that's being kept, and let's see what time it is. All right, 4:45. So what do I see here? Okay, so 4:45, 5 o'clock comes in. So this alone, this area, this is technically a bullish order block right here. You could have taken your trade right there, right? But obviously that's a lot of pips right there. So let me see how many pips that is. Yeah, so 15 pips. So I need to get in maybe 6, 7, tops 10 pip stop. But I usually like to go from 5 to 6 pips around there. That's the target that I'm going for. Now this gave my bias a very bullish bias because what you have to understand, and something that I've noticed, is that this line right here, this wick, took out this liquidity before, took out that liquidity, right? So now before a major move, you have a liquidity run. Well, usually when banks are trading, you have a liquidity sweep, and then you have a continuation. So then I'm looking at the 7-minute now, and the 7 minutes telling me the same thing. So I'm cycling through these entry time frames. Anything under 10 minutes is my entry time frame. So I'm looking at this, and I say, okay, well, I'm gonna take a trade right here, set my stop under here, right? For 12 pips, it's not the best pip range, but all right, cool. So that's where I'm at, and then I'm cycling down through the time frames. Okay, so ideally, what do I want price to do? Now it's at the 1 minute, right? Now it's at the 1 minute. I'm waiting for some sort of pullback right here. in order to get into the trade because I don't want to chase the trade. Otherwise, I'd have to make the stop loss a little bit bigger, and that messes with my risk to reward. So I'm looking for the first. Okay, so let's see if we get a second one. No, but what did we get here? What did we get? Okay, I understand that sometimes price likes to run. It doesn't come back down to your area that you want it likes to run, but that's only if like you're experienced, if you understand, if you have enough time there. So I know that this is a bullish order block, and I say, okay, well, we already took out all this. We already swept this liquidity to the left. We already price is I know there's a little bit of an inefficient price here. I like price ultimately to come into this area before it comes, but sometimes it doesn't. And I'm looking at the 1 minute, it's giving me a bullish order block. I'm looking at the 2 minute, it's giving me a bullish order block, right? And ultimately, after this candle, I said, okay, well, I'm going to do a 0.5% position, and I'm going to set a 6 pip stop. And if it stops me out, it is what it is. I already have my second target, and let's target, first of all, a 1 to 3, which is right there. All right, so let's see what happens. Let's see what happens. Okay, cool. We got a strong impulse. Now I'm looking at the 2 minute. Okay, everything's looking good. Now I'm zooming out to the 3 minute. Well, that kind of gave it away what happened. But usually after this, I look at the 3 minute candle to monitor my trade because just to see what's going on. 3 to 5 minute. Okay, so you have another candle and 3 minute. I said, okay, well, that's why I put these marks here. Okay, well, I know that I don't want price to fall below this. If it does, I need to see how the other candle closes. Okay, and there you go. It hit the 1 to 3, and after this, I exited. No, it wasn't really a 1 to 3. I actually did set a hard stop, which I should have. I usually don't set hard stops because I could have just closed up here and got a little more. But hey, you know what? It is what it is. I got my 1 to 3 for today. Price ultimately came into this high. Yeah, so price ultimately swept the liquidity from the previous high, and for a total of 1 to 7 or 1 to 10. So around right there. And what else happened to price? I don't remember what else happened to price. I think it just kind of lingered through there. It kept going actually. Let's see. Let's see ultimately where it ended up. Let's see where price ended up. Yeah, I suppose the highest high was, yeah, that's where we are right now. I suppose the highest high was right here, right? So let's say, where would you have gotten out? Probably here because of this exhaustion right here. But you could have also gotten off right here. So realistically, you probably could have got a 1 to 7, 1 to 8, 1 to 10, something like that. But I'm happy with my 1 to 3. I got a 1 to 4 this week as well, so we're up 7% on that account. $7,000 for the week. So far, we still have tomorrow. I usually don't trade Fridays actually, but we still have tomorrow. I still wake up. I still monitor trade. Now, if I see a really juicy trade, I'll take it. But yeah, dude, this is what I wanted to show you guys, and I'll catch you on the next one.